Market rally post NFP, and is Nifty overheated, or is this a bullish continuation? All of this on Midweek with Indiacharts today. Hello, everyone. This is Shilpa Raidas, and I welcome Mr. Jay Vora, the Chief Analyst with Market Analyst with Indiacharts and Strike. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good, Jay. And I'm very excited to hear your views, like always. So, Jay, beginning with the non-farm payroll, the non-farm payroll data was somewhat favorable for the markets. Bond yields fell, S&P 500, NASDAQ 100 rallied up, but the Dow Jones Industrial and Russell 2000 are lagging. Is that concerning to you, Jay? Also, please tell us what about the dollar index, gold and silver? Jay.
Yeah. Firstly, I hope you can hear me properly, because I think in last two episodes, many of the people did mention that, my voice was low. So I hope you're able to hear me properly.
I'm able to hear you very clearly, Jay, loud and clear.
Okay. I hope then this issue doesn't arise today. But yeah,
Yes.
coming back to our discussion. So yes, the non-farm payroll was out, and it was like, okay. I mean, the job openings were fine. I mean, the employment and all was also okay. The only highlight over here was that the unemployment rose higher. So I think the unemployment data rose to 4.1 from 4. So this is what I think the Fed wanted to see, basically a moderation in job growth, and a slight uptick in the unemployment data. So on that front, everything is looking good, and that is why I think the yields also fell. So I think the 2 year fell from 470. I mean, it is right now around 4.6 or so. And even when we look at the trajectory of the yield, I think it should come down. So let me quickly share my screen. US 10-year. So yeah, when we look at it, okay, this is 2 year. I have to look at, sorry, that was 10-year, and I have to look at US 2 year yield. Yeah, so as you can see over here, it has been falling down. I mean, it went up to 5.04 or so, but then it has been falling down. And even if you see the weekly RMI also, I mean, I guess it would be in sell. Yes, it is in sell. The averages are broken. And, it is now looking like that it will, probably make one more leg on the downside and maybe even go below 4. And I think if all things being equal, we don't see any, real bad news as such, then we should ideally see the yields going down, and that should broadly be bullish for the market. So like you highlighted over here that, S&P, if we see, that is inching higher. If we see NASDAQ 100, that has been seeing a smooth uptrend as well. Okay. But when we look at the Dow Jones Industrial, I mean, here it is lagging. Okay, it has not even broken past the previous high. When we look at US small cap Russell, I think even that seems to be consolidating, and it has not broken above the previous high. So look, I mean, every time we see this intermarket divergence, those are concerning. But you can say that as long as the stronger ones are not giving up, okay, there is a good chance that the weaker ones will eventually catch up on the upside. So in this case, we can see the Dow Jones Industrial and the Russell 2000, which has not participated yet. In fact, there can be a good chance that they may catch up on the upside. So it's only when the S&P 500 or the NASDAQ 100, when it breaks down. So basically, the first concerning level would actually be the blue line, which we always mention, that is the 40-day exponential average. If that breaks on the downside, that is the point from where the concerns may start. Okay, that whether are we going to get into a deeper correction or no. So those all discussions will kick in once the 40-day breaks. But until then, I think we are okay. And in fact, the bet would then be that the ones which are laggard right now, the bet would be on those that they eventually pick up. So that is how I am looking about it in the near term. And even when we look at the dollar index, so I think post that data also, it saw a sharp decline. And we can see that, over here on the daily chart, the averages are broken. Now we have the trend line support, which is say somewhere around 104.65. I think
Hmm.
once that breaks on the downside, and I think even the weekly averages might be somewhere around those levels. So yeah, even when we look at the 40-week exponential average, that is right now at 104.54. So, we can take some margin, and let's say that 104.50, that is now like a major support level on the downside. And I think once the 40-week exponential average breaks on the downside, so that's where I think the much awaited decline for the dollar index may come by. And if that happens, that will sort of fuel the rally in equity markets, gold, silver, and everything. And even if
Hmm.
we look at the gold, uh, so yeah, gold, resisted somewhere around the 61.8% retracement level of the previous decline. So I think once we get a break above this previous high, which was 2392, I think over here as well, the uptrend can continue. And, it might eventually head higher towards its previous high of 2450. And of course, in the longer run, people know what the picture is. So I think it can go then much, much beyond 2450. But I think in the near term, this is the hurdle that needs to be crossed, which is, like I mentioned, which is around 2392. Once we get a decisive close above that, gold should see a good momentum on the upside. Even silver, if you see, it is right now hovering around this 61.8% retracement level. Okay.
Hmm.
So I think once it sees a decisive break above this 31.5, there again, we might end up seeing some good up move in silver as well. So basically, then the next level will be the all time, I mean, the 52-week high, which is at 3251. And once
Okay.
that breaks on the upside, a much larger target on the upside may kick in. So that's how this entire picture is.
Hmm.
We need the dollar index to break down specifically below 104.50. I think once that breaks on the downside, we might see further more momentum on commodities and in equities as well.
Wonderful. Thank you so much for that, Jay. That definitely brought us a lot of clarity. Joe, the next thing I want to know is that the FII's long position are sustaining at higher levels, and also the Nifty index is broadly in an uptrend. Are things getting overheated here? And also, please tell us what are the sentiment indicators signaling right now, Jay?
So yeah, I mean, if we see the FI's positioning, so yes, it
Hmm.
is almost at a 6-7 year high, as you can see over here at the bottom, the
Yeah.
green line. So your, such high readings were back in 2017 or so. Wait, yeah, such high readings were somewhere around in 2017 or so. So, but over here also you can see that when this reading was high, okay, at that time Nifty was somewhere over here. But after that, what happened was that the Nifty index continued to inch higher. And over here, we saw some zigzagging, and basically over here we ended up seeing divergence.
Hmm.
And only then, the Nifty index saw some correction over here. Okay. So something very similar can happen over here as well, where, you know, we end up getting some zigzagging in the FI's positioning, but the up move continues. Now, the reason why we are thinking of the up move continuing and the Nifty not seeing any major correction in the near term is because the Nifty index has broken out from this rising range which it was in since from Jan to almost June. So 5-6 months it saw a consolidation, but it was slightly upward slanting. So now that it has broken the range on the upside, the expectation would be that, it should see the up move, only gaining momentum. So of course, we have seen a one-way rise from almost 21,200 odd levels to whatever we are right now. So there can be some pullbacks, that we need to be prepared for, but that's about it. I mean, I don't think there will be any major correction as such. So when we look at the Nifty index and its levels, so the 20-day average, which is at 23,888, okay, right now. So that will be a major support level on the downside in the near term. And of course, this will be rising each passing day. So as long as the Nifty index does not break 20-day on the downside, the broader idea would be to think that the bullish trend is intact. And at the max, what we might get is a pullback up to the 20-day, and again we inch higher. Now, one of the reason to also think of, one of the reason to think that there may not be a major correction is because of the rotation that we are seeing in the market.
Yeah.
So, earlier Bank Nifty was rising higher. At that time, everything else was lull. Then when Bank Nifty gave up, IT came into picture. IT gave up, then oil and gas, PSUs, all these sectors have now come into picture. In fact, FMCG has also participated in the last few days. So that way, each of the sectors are coming to the rescue for the Nifty index. So not necessarily that on an index level we see a correction, but there might end up being a lot of rotation, which we will obviously look at the RRG, and there we'll try to assess which of the sectors are getting into leading, lagging, and which are the sectors that are improving. But when we purely look at the sentiments, so this is something that I had mentioned last time also, that higher levels does not necessarily mean a big correction. I mean, until from 2020, if you see, there was this range that got built in. Okay, now there has been a breakout from this range. So it can very well happen that, we end up seeing divergence like this. Okay, where the Nifty keeps rising higher and we see some minor correction. And it is not just this, but even if you remember, I mean, we had discussed about the breadth as well. So even in case of breadth, like you see over here, okay, I mean, the breadth was high. I mean, over here it got into overbought zone. And after that, what we saw was that the pace of the up move, slowed down. But nevertheless, we saw that the Nifty index kept rising higher, right? So before topping out, we saw this multiple divergence that got formed, and only then we ended up, seeing a correction. So something like that can very well happen, where we end up seeing some minor correction, then an up move, then a correction, then an up move, and in breadth end up seeing some sort of divergence, and only then we give up. Okay, so that is how we are working with. That is the idea that we are working with right now. Even when you see the 40-day average, something very similar had happened in the past. Like, it got towards this second orange line over here. Okay, when the Nifty was over here. After that, we did saw an up move, and only then it gave up and it saw a correction. So something like that can happen. In fact, even over here, a similar thing happened. So that is what we are anticipating right now. So look, the thing is that, the pace of the up move will slow down. I mean, the kind of moves that we used to see every day in the past, I think that may not repeat. So, it might be a bit of a struggle to find out stocks, stick to them, because, it may so happen that 2 days it will go up, but again, for a week, they'll consolidate and then again they'll go up. So in that case, your patience will be tested. And I think that is the sort of market that we are in right now. And look, we have mentioned that whenever multiple indicators starts giving you a hint of an overbought zone, that's where you have to be very careful, right? So I mean, if we look at FI's data, so yes, it does tell you that the FI long position is very much in this last 6-7 years. If we see their clients data, again, they are shorting like no tomorrow. But in the past, we have seen that this short position can go further lower as well. So as long as this is something that I had mentioned earlier as well, that we need to see a price action reversal as well, along with sentiments getting extreme. When that happens, that's where you end up, preparing for a deeper sort of correction. But also there is one more medium term indicator which we have discussed in our webinars as well, that client plus FII net future. Okay. And over here as well, you can see that when they have, come to this first line, typically it is sort of a midway or something, but it is when they come to the second line, okay, on the upside. That's where, you have to be careful that can a deeper correction set in. Okay. So right now we are coming to this first line, but if this comes to the second line, okay, and we see record longs in FIIs, record short by clients, then I will be a little worried, because then what it would mean is that DIIs are getting net short now. So again, DIIs ka net short when it reaches the first line, I mean, this is still okay. But once it reaches the second line, okay, that's where, it can start getting a bit concerning, because, when the DII short reach the second line, that is sort of an indication that maybe a medium term, uptrend could also be reversing. So in that sense, when I look at all the sentiment indicators, so this is something that I look at it every day, just to understand if the things are reversing or no. So as of now, when we look at the sentiment data, it doesn't tell you that, we are like extremely overheated. I mean, there are one or two indicators that are indicating that we are in that overheated zone, but there are others that needs to confirm. And like I mentioned that, there can be some divergence that we can see also, during that time. So yeah, so broadly, that's how I'm looking at it. Not too overheated sort of sentiments. And there seems like, some more room left on the upside in the near term.
Wonderful. Thank you so much for that, Jay. Let's come to our current favorite topic, I would say, the RRG. So Jay, which are the sectors that are looking good based on RRG right now? And which are the sectors that we should be careful of in the near term, Jay?
Yeah. So when we look at RRG, so over here, see, just we'll go through it once again. I mean, last week when we spoke, I think it was something like this. Wait, let me check the date. It was 3rd. So yeah, it was something like this. Okay. What was happening was that banks and all were losing momentum. Okay. IT was the one which was catching up. You see energy over here, which sort of, got into improving from lagging. And there was this oil and gas, which was also turning up, and, it was trying to go towards the improving. And what you see in the next 3-4 days is, you can watch the screen over here. You can see that the ones which were in improving, they started to rise higher towards the leading, and you could see this IT also rising higher, and bank Nifty, which was already losing momentum, that falling down. And you can see over here, and as we stand today, there are many of the sectors now which are, sort of coming into that improving stage. In fact, CPSC, oil and gas, they have already come into the leading stage. So this is what, I'm actually trying to tell, that there are some of the other sectors that are coming to the rescue for the Nifty index. And that's why on the headline index, we are not seeing any major correction, right? In fact, even when we look at the charts, I think, in this entire setup, if we look, I actually like, pharma and FMCG. So if you see Nifty Pharma Index, I think this we had discussed last time. But what has happened is that there was an up move. There was this consolidation that we saw, after which there was an up move, pullback, retest of consolidation, and now again an up move. Okay. So I think if we look at Pharma Index, I think there is still a lot of room that is left on the upside. So even from current levels, if we see, if we go, I mean, if the Nifty Pharma goes towards the upper end of the channel, it is some 1,000 points away from the current levels. Even if we see the Nifty FMCG index, that has picked up. I mean, that nearly, that completed the cycle on the daily chart, and now it is again rising higher. And those who are classic technical analysis followers, they would see that this is basically a cup and handle which got formed, and cup and handle pattern is usually a continuation pattern once it breaks on the upside. So yeah, there are basically many interesting sectors that are emerging, and thanks to RRG that we can now actually look at it and take our decisions based on that. But yes, there are few sectors which seems to be lagging, and I think PSU banks is one of them. It was in a lagging stage previously as well when we discussed. Even now it is lagging, and the JDK RS ratio, that means its relative strength to the Nifty index is only deteriorating, and that's why it is moving to the left. Now, one of the index that seems to be entering this lagging mode is the Nifty CD, that is nothing but consumer durable. And when I look at the chart, I can see that there is an up move and now a consolidation that is happening. So, with RRG going into the lagging mode, maybe there could be a chance that, it might end up completing the cycle. And that means maybe for some time it may underperform. And that is what, might get it in the lagging phase. And it may stay over there for some time. But yes, broadly, if we see, many other index now seems to be emerging over here. So it is basically energy, oil and gas, FMCG, healthcare. In fact, even infra seems to be making a comeback. So yes, broadly, I expect that the markets will somewhat be sideways, but there might be a lot of sector rotation that might be happening. And one who may actually want to see it visually and see how things unfold, maybe they can have a look at RRG. And in fact, if they have they have still some difficulty in understanding RRG, there have been couple of webinars that have been posted on the Strike platform. They can go through that. In fact, the last 2 or 3 interactions which we had in midweek, I have sort
Right.
of even explained the concept of RRG over there. So I mean, maybe towards the end of the video, if you go, because RRG is usually the last part. So if you go towards the end of the video, you'll get the explanation of RRG as well. So that will sort of help you to plan your position accordingly, and probably help you stay with the outperforming sectors as well. So that will significantly help you to narrow down your focus list on those particular sectors as well, because those are the ones that are outperforming. So yes, broadly, that's how I see the market. Maybe loss of momentum on the upside, but a lot of sectors that can emerge in the days and the weeks to come. So couple of them which I mentioned, that particularly looks interesting is pharma and FMCG. So let's see how things unfold in the coming week.
Wonderful, Jay. That was definitely an insightful session. Thank you so much for that. Our viewers must have definitely got a comprehensive analysis out of it. Also, while you're at, guys, if you haven't signed up to Strike as yet, you should right away. I'm going to leave a link down on the description. You get a 7 days free trial when you sign up from that link. So get it on. And yes, we are having yet another free webinar this Saturday. I would like to tell our viewers about it. So the webinar topic is on how to find the right opportunity for options trading using Strike OI Insights. It's going to be held by Mr. Mohit Aggarwal. It's on this Saturday on the 13th of July from 10 a.m. to 12 p.m. And basically, the gist of what you are going to learn from the webinar is a bird's eye view of options activity, understanding the trend of the stock, and finding momentum opportunities for stock options trading. So it's going to be a very interesting webinar. Like always, we hold very interesting and insightful webinars, so do attend it. I'm going to leave a link down on the description. It is a free webinar, so book your seats right away. And that is very nice, Jay. It was lovely having you. Thank you so much for your time. And we will see you next week with midweek. Thank you so much. Take care.
Thank you.